Hello, in today's video I would like to explain to you what settings I use in ATAS and why. Because this was one of the most common questions you asked under the videos. So this video is here to answer this question. If you've been following this channel for a longer time, you know that I trade Bitcoin futures using orderflow. I use ATAS, which is, in my opinion, is the best orderflow volume analysis tool for crypto trading. When I trade Bitcoin, I trade absorption. And for that, I need following information: volume, delta, imbalances, and volume area. Let's start with the volume, because volume is the most important part of my trading strategy. So there are two types of volumes. First is volume per candle, and the second one is volume on level. So let's start with the volume per candle, also called volume over time. Volume over time shows how many contracts were traded during a given time period. It therefore tracks the volume of each candlestick. These volume bars indicate how large the volume is within a given candlestick. If the volume is above average, the bar is larger. When we track volume in orderflow software, instead of bars, we often see color fading. So, the higher volume within the candlestick, the lighter the bar's color. As I mentioned, volume over time tracks how many contracts were traded during a given time period. For example, if we are looking at 5-minute chart, each candle represents a 5-minute interval, and the volume bar below of the candlestick shows how many contracts were traded within those 5 minutes. And the same applies for every single time frame. We use volume over time as a confirmation of whether there is activity at a given key level or not. If we want to trade at a given key level, we want to see increase in volume, because without volume we don't trade. That's important point. When the price at key level shows an increase in volume, we know that large positions are active there. This means we want to see exactly where the volume is forming and how the price is reacting to it. Next is volume on level, which in my opinion is a little bit more important than volume per candle. A volume on level, as the name suggests, tracks the volumes at specific price levels. Again, the starting point is the time frame I'm using at the moment. For example, if I'm using 5-minute time frame, the footprints show me the volume at certain levels within one 5-minute candle, so we can see exactly where the highest volume were. The volumes are displayed on the left side of the footprint. Thanks to this, I can determine which level was the most attractive for traders during those 5 minutes and where the most trades took place. A great strategy is to wait for a high volume on a given candle and then use a volume on level to track exactly where this large volume was traded. Because we are only interested in large, significant activity, not in small noise. So track activity over time and then decipher exactly at which level the activity occurred. Next aspect is called delta, which is also very important part of my trading strategy. So let's take a look on delta and delta profile. The delta profile is located on the right side of each footprint, and the larger the delta at a given price level is, the lighter the profile will appear. So for example, if there is a huge positive delta at specific price level, profile with that level will be green with the bright color. When sellers dominate a certain price level, the delta will be negative. The stronger the dominance, the lighter red the profile will appear. So, thanks to the delta profile, you know exactly which part of the candle showed the greatest aggression and from which side it came. Now, how is the delta profile actually formed? At each level, interaction takes place. Aggressive buyers hit limit sell orders and aggressive sellers hit limit buy orders, as you know from previous videos. The footprint shows only aggressive activity, so when the limit sell is filled, it will appear on the ask side on the footprint. When a limit buy is filled, it will appear as a bid. And delta is created by subtracting bid from the ask on that specific level. This will represent the final dominance of one side. The greater the dominance, the lighter the color of that specific side will be. For example, now you can see this footprint. At the upper price level, 106.99 contracts were executed on the bid side. That was aggressive selling. And 57.07 contracts on the ask side. That was aggressive buying. Subtracting bid from ask, gives a delta of minus 49.92, indicating that aggressive sellers dominate this level by 49.92 contracts. Since the dominance isn't too extreme, the delta at this level is red, but it doesn't indicate anything out of the ordinary. What can be considered as extreme is the delta at this price level. Around 10 contracts were traded on the bid side and 306 contracts on the ask side. So somebody aggressively bought 306 contracts here, creating dominance of 286 aggressive buyers. And that's key piece of information here. The exact same theory applies to delta over time. Same as with volume over time, delta over time also tracks dominance of each side during a single candle. So if you use a 5-minute time frame, the delta over time will show you the final dominance of one side. Along with delta over time, there is also delta max and delta min. Max delta shows the peak dominance buyers achieved during a single candle. For example, in 5-minute candle, buyers might reach delta 1000 at one point, but later sellers reduce it to 500. The regular net delta would then show only 500, but maximum delta reveals that buyers were once in control with plus 1000 delta, highlighting the strongest buying pressure during that candle. Although the candle's final delta here is 363, max delta reveals that at one point buyers held a stronger advantage, reaching delta plus 481. This highlights the peak buying pressure within this candle. If I would turn off this feature, I wouldn't see this information. So max delta shows the maximum dominance of buyers during a given candle. On the other hand, min delta shows the peak dominance sellers achieved during a specific candle. For example, in 5-minute candle, delta might drop to minus 1000 at one point, but later buyers reduce it to minus 500. The regular net delta would then show only minus 500. But min delta reveals that sellers were once in control with a minus 1000 delta, highlighting the strongest selling pressure within the candle. Here we see that the final delta of this candle is minus 175. What the final delta doesn't show is that during this candle there was a moment when sellers managed to create a peak delta of minus 367. That's what min delta captures. Final delta don't. That's why it's so important to also track min and max delta, because it gives you more detailed view what is going on behind the candles. Volume area per specific candle. The volume area is this orange zone. It represents 70% of total traded volume. So when I know that certain candle has huge volume area shows at which levels within the candle most of this volume was traded. It's basically an addition to volume on level, which tells you where the most volume occurred. This is good to watch because when the volume is concentrated around one level, it indicates absorption, which is a reversal pattern that I trade pretty often. If the volume area is wide across the entire candle, it indicates a healthy movement and we can expect continue in that direction. So this is called volume distribution, and I have full video on that in my course. So if you are interested, check out my website lunaracademy.eu, where you will find this full course along with free PDF materials. The course also includes this template with my ATAS settings and my entire trading workflow. On Udemy, the course has very good reviews, so if you are interested and serious about trading and want solid knowledge, visit my website lunaracademy.eu. I'll leave you a link in the description of this video. And last, very important metric is imbalance. Imbalance is a situation where buyers outnumber sellers multiple times, and vice versa. Imbalances usually indicate pressure from one side and confirm that side's interest. Traders and institutions closely monitor order imbalances because they can indicate short-term volatility, potential liquidity issues, and opportunities for entry or exits. Imbalance is measured diagonally, not at single price level, like a delta for example. They serve a similar purpose, to identify which side has the upper hand, but each measures it in a slightly different way, which is why it's so useful to use both. Imbalances in order flow/footprint chart is typically measured diagonally. meaning it compares aggressive buyers on the ask at a given price level with aggressive sells on the bid on the tick below. For example, at price 100, there was 500 contracts traded on the ask, market buys. At price 99.9, there was 100 contracts traded on the bid, market sells. That gives a ratio of 500 to 100, 5 to 1, which is strong buying imbalance. Delta, on the other hand, measures the difference at the same price level, bid versus ask, while imbalance compares them crosswise, diagonally, between levels. So delta profile is like macro view of aggregated activity, and imbalance is more like micro view, strong local pressure. In our ATAS template, imbalances are highlighted in green and red. A buy imbalance is shown in green, while a sell imbalance is shown in red. So this is my setup, which I use and why. It's a really broad topic and not everything would fit into one video. If you want to learn more about my trading approach, check out my YouTube, where you will find plenty of free videos with live trade examples. Also, don't forget to check out my free Discord, where you will find daily market outlooks with key levels. If you have any following question about this video, feel free to ask in the comment section down below, and I will be happy to answer you. I would really appreciate your like and your subscribe, because these two things are for free and it supports me a lot. Thank you so much for watching, and I'll catch you in a next video.